Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarley. Great to have your company this Thursday afternoon. We are flying through February, and today was a very busy day on the reporting season calendar, but a very fruitful day as well. Let's have a look at where the market is finishing out the session. Up 0.9%. If you look around those gains between 11 and 1 p.m, we actually hit a record, 11 a.m. and 1 p.m, we actually hit a record at one point as well on the ASX 200, which is heading into match off about 1/3 off all-time highs, but still an incredible session, up 0.9%. It's a new 100-day high on the ASX 200. It comes after gains on US markets overnight. A slew of data showing the US economy is holding up, drove stocks higher. We also had the market gaining amid these easing jitters around AI disruption. Then, of course, locally, some pretty good results which lifted the overall market. So getting into the themes of the day, reaching new heights, of course, as we hit those new records coming through earlier in the session. But as we've mentioned many times, and I know I keep saying it, but I just love this comment that Jason Todd from 10Cap said to me at the beginning of reporting season. If you deliver, you get rewarded. If you don't, you basically die or drown. And Zip was certainly one which downed or drowned today amidst its earnings. It was a stock of the day, so we'll get some insights into that later, but absolutely smashed on its result today. Does that mean that it is a buying opportunity at these levels? We'll have to wait to see what our experts on the call said. And then on the job, of course, we had the jobs report coming through. Not quite the, I guess, blockbuster report that we got in December, but still very solid, pretty much in line with what the market was looking for, just under 18,000 jobs created. Importantly, the unemployment rate remaining at 4.1%. And now, of course, this has traders looking at when the next rate hike from the RBA may be. Bond traders pushing it out to potentially June. I spoke to Paul Brennan from Suncorp earlier. He thinks still in May. And a lot of these jobs came through in the full-time space. But I will point out that speaking of jobs, Qantas is flagging some potential job cuts this afternoon. Hundreds of Qantas employees, according to AFR, will find out their fate this afternoon after the airline announced cuts last year. It's set to communicate with staff about job losses that will happen after it decided to bring its Qantas Link regional operations and domestic airline under the same manager. All right, getting back to the markets and having a look at some of these sectoral moves this afternoon. Kicking it off with the consumer discretionary stocks, we are going to speak to Rob Scott from Wesfarmers a little later. Look, it looks like a pretty good result, but Rob Scott, the CEO, is warning of these cost of living pressures. What is that going to mean for how much we spend, particularly if we are seeing some more rate hikes on the horizon? Wesfarmers shares down 5.3%, a bit of a switch out of JB Hi-Fi, and Lovisa punished as well after its earnings result. Elsewhere, having a look at the energy sector, it was a front runner today. Global oil prices rising by more than 4%. Traders pricing in these potential supply disruptions amid concerns of conflict between the US and Iran, and after talks between Ukraine and Russia in Geneva ended without a breakthrough. Woodside Energy there up by more than 4%. Santos up by an impressive 6%. It, of course, reported today as well. Then having a look at the telcos, led by Telstra with its best gain in a year on the back of its result and an increased share buyback, shares up 4% to $5.17. Well, a lot of earnings out today. We heard from the private health insurer Medibank. Its half-year net profit after tax fell. And we spoke to CEO David Koshkar, who argues investors should look beyond the result.
Well, so you've got to look through the total result. The operating profit actually up a very strong 6+%. When you look at the investment income, which has reduced year on year, it's really all to do with the interest rate changes from last year. So we would look through that, and the market would look through that and look at our operating profit result, which was a good result. We've seen strong momentum in our health insurance business and very strong growth in Medibank Health, up 28% or so.
All right, Wesfarmers, another one we touched on. Half-year profit above estimates, but of course, the CEO there warning of cost of living pressures. Telstra, it saw its half-year net profit rise, but of course it was about the share buyback, sending its shares higher. Transurban there posted a first-half profit of 343 million, swinging back into the black, but shares lower today. Brambles up 4%. It reaffirmed its full year 26 underlying profit guidance. And PLS swung to a first half profit of $33 million, up almost 150%. Let's get his take now on reporting season, and welcome to the COB, Mathan Somasundaram from Deep Data Analytics. Mathan, what a day. We almost hit a record, or we did at one point today.
Yeah, it's a merry-go-round. There's stuff moving around all over the place. It's been a good day for most of our clients. It's been, a number of the stocks you mentioned. We've been in Telstra. Another one that's had a really good result and bounced today is Sonic Healthcare. It's bounced to nearly 6-month high. So a lot of those like boring stocks have actually started to do quite well. Energy sector we've been talking about for a while, that's showing the interest. It was always going to happen. It's just a matter of time. And the geopolitics of it, look, it looks inevitable, but who knows? But at the end of the day, the cycle and the seasonality of it is very positive for energy over the next 3 to 4 months. So generally, this is when you get the energy stocks running. And the interesting part is you've got all parts of the energy sector moving: oil, gas, uranium, even thermal coal. So everything is running at the moment.
It certainly is. What about Wesfarmers? And speaking of some of these, commodity prices too, because the lithium piece here. I'm about to speak to Rob Scott. Any sort of nuggets you'd like to know about that result?
I think the thing about Wesfarmers is they're pretty much a listed private equity business, right? Mm-hmm. So they've got so many pieces running, and they'll have a history of balancing it out quite well. So all the listed private equity businesses have done really well. They're coming off pretty high multiples, and the market rarely, yes, it's down 5%, but that's just a flesh wound. The stocks have run so much, and all of them. If you think about Macquarie, Wesfarmers, you can think of, it's not coming into my head, but there's about 4 or 5 of them, and they're all basically listed private equity businesses, and they're trading at pretty high multiple, and they've had huge runs. Yes, they're going to come off on the result because expectations are really high, but the trick here is, for the first time in the US, for the last 4 months, we're starting to see growth to value rotation. And, we've had it packaged as SaaS models getting hammered, and then insurance stocks getting hammered, and all of that. But the clear trend overall, growth stocks underperform. And that's early in the cycle. If you look at where NASDAQ is, the bond yields where they are, it hasn't barely moved. So there is a fair amount of growth to value rotation that's going to play out. It's just the cycle. And so when that's happening, stocks like Wesfarmers are going to be under pressure. But I would be looking at, if I was asking them questions, it's more about how their defensive retail businesses are holding up, because that tells us how the overall retail sector is doing, because if they're struggling, everyone else has got bigger problems. So they got Kmart, they got Bunnings. These are big defensive retailers. Are they holding up? How is the consumers dealing with them? If they're starting to see weakness, that would be a worrying sign for me.
I was not expecting a Monty Python reference this afternoon. Just a flesh wound. All right, let about Zip. Is that more than a flesh wound, what we're seeing with Zip?
Look, it's a classic. I get people love it, hate it, and all that. Look, buy now, pay later is you're playing finance on steroids, right? And it's literally buy now, paying later. And the reality is Zip is probably the better option in that sector. And we've been a fan of it, but it's just the cycle is wrong. Their main growth story is US, and US consumers are under pressure. They're getting hammered. The government is telling them they're not getting taxed while they're getting taxed. That's how bad the situation is. Consumers are under pressure in the US. The whole concept of pushing people, credit card interest rates have gone. This is a country where you used to have 10% credit card interest rate. Now they've got over 20%. I know Mr. Trump's trying to push at 10%, but all that will do is push more bad debt into buy now, pay later. So I think the natural loading up of debt is hitting the buy now, pay later, and the bad debt's starting to come through, and I think that's going to scare people. And it's just an economic slowdown, and this is the classic way to not play it. So you don't want to be in buy now, pay later into a slowing economic cycle. So that's just how the cycle plays, and Zip is, I don't think there's anything seriously wrong with the business model. I just think they're in the wrong cycle, so they're going to get hit.
Yeah, all right. Well, maybe a time to look at buying at these levels. We've got just over a week to go. We probably won't talk to you for another fortnight, I think, on the COB. What are you expecting? Is this when all the cockroaches come out in the last week?
Yeah, this is going to be interesting. I mean, there's a lot of macro playing out as well, so it's going to be tough to work out the information between macro versus micro. But overall, I think the reporting season has been relatively good for value stocks, has been really tough for growth stocks, hence we've seen the volatility, and most fund managers have done really well being long growth stocks. So is this a change of the cycle where you have to move from high growth stocks on high multiple to picking growth stocks turnarounds? That's going to be the fascinating part for me. So the next couple of weeks, post reporting season, all the brokers will get together and they'll do their reports. Fund managers will have to decide how they're going to position themselves. So it is an interesting part of the cycle. Macro assumptions will change. That happens every quarter. So that'll probably change after the reporting season. So I think how everyone positioned themselves after this reporting season is going to be fascinating. I think the trend hasn't changed. I think the growth value still plays out. And I think a lot of people are trying to pick the bottom and the turn in beaten up growth stocks. It's going to be fun to see how that plays out. I am sitting on the sideline. I'm not taking any bets on it. I do like a lot of stocks that have been beaten up. I'm more than happy for them to get beaten up more, but I'll wait and see how it plays out.
All right, you're going to wait for the stabilization or a bit more of a dip. Thank you so much, Mathan, as always. Mathan Somasundaram from Deep Data Analytics. Well, we touched on Zip there. It was the stock of the day on the call, rather, and we spoke to our experts, Mark Gardner from MPC Markets, Howard Coleman from Team Invest.
Credit in the US is really under the pump at the moment. Consumers are under a lot of stress. So this would be one that I'd probably watch list it for now, because I think it can get worse. Not that it should get worse, I just think it will, because the momentum that goes with these some of these stocks lately, particularly stocks like Zip, you think it's cheap and then you're 15% out of the money. So yeah, I'd be waiting and just putting on the watch list for now. But
okay.
But if you're really keen on it, it's maybe a speculative buy. But I'm erring towards a buy. But I just think you can be patient, particularly on a savage move like this.
Well, that beautiful story that Zip had when it didn't make any profits, so everybody could believe it was going to be as big as anybody wanted to believe. When there's no profits to measure by, you can imagine whatever you'd like to imagine. It's like going to a sci-fi movie. You can have great fun imagining. Now that it actually makes a profit, people can see what the business is actually worth. And it's definitely not worth the $14 a share that it was when it was only a story.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, a very positive day on the market. Let's have a look at some of the leaders that helped get us there, including Hub24, and I believe our interview with the CEO, Andrew Alcock, should be on our website shortly. Sonic Healthcare as well did very well after its earnings. Michael Carmody from Centennial Asset Management had some stuff to say about that you can listen to as well. Elsewhere, Karoon, NRW and Deep Yellow. The downside, though, was Zip, as we've touched on, Lovisa as well after its earnings, Medibank Private, which also reported, Wesfarmers, which also reported, and Whitehaven Coal, which was down 5%. In the small end of town, Osco Healthcare had a good day, up 20%. Articor also firmer there. But some of the laggards in the small end of town include these stocks on your screen, including Calix, which was down by 24.5%. Tonight, we get US trade data, the Philadelphia Fed business outlook, and earnings continue, including Walmart, so a great pulse check on how the US consumer is doing. Tomorrow, Friday, flash manufacturing and services PMI, some more earnings, including Mineral Resources and Telix. We'll be speaking to them. Cube Holdings, Guzman and Gomez, we're speaking to them as well. Ingham's, we're speaking to them too. So we'll have their CEO interviews from Telix, Guzman and Ingham's tomorrow. The market closing higher by 0.9%. The ASX 200 has closed firmer by a similar amount today. 0.9%, 9,086. It's about 0.4% away from the all-time high, but up 0.5% over the week so far. We'll take that. All right, very busy day on the reporting calendar. We'll be back from 9:45 a.m. Eastern tomorrow.